What's going on, traders? Hope everybody's having a great weekend. Wanted to do some analysis here for you on the E-mini S&P futures as well as the NASDAQ 100, the snazzy NAS. My name is Shark. If this is your first time to the channel, don't forget to subscribe and turn on those notifications. Otherwise, thank you so much for the returning viewers and supporters. Really appreciate that. If you could, smash that like button. It would mean a ton to me. And let's get into this week's video on the markets. Remember, though, that this information and content is for educational and entertainment purposes only, and in no way should be viewed as financial advice. All right, with that out of the way, we're going to start off the video with looking at the economic calendar for this week and see what we have on that front. And of course, we do have NVIDIA earnings midweek, I believe on Wednesday after the market closes. So just watch out for a little bit of potential hesitation in the markets coming into what basically is another major economic quote unquote event. But let's actually look at that economic data now and see what we have coming up this week. All right, so this week, let me make it a little bit bigger for us. All right. Monday, not really too much going on overall. We do have Lori Logan, Dallas Fed president, speaking at 3:15. Nothing really on Tuesday, the 26th. Consumer confidence coming out at 10 o'clock. We'll be keeping an eye on that. Thursday, GDP coming out at 8:30, along with initial jobless claims. A little bit more Fed speak when the market is closed at 6 p.m. On Friday, the 29th, we do have PCE coming in and core PCE all coming out at 8:30. And then we also have Michigan consumer sentiment at 10 a.m. So that will be important as well. But relatively quiet day, or excuse me, quiet week for the last week of August, with a few notable mentions. All right, let's close that out and start to get into some of the charts. We're going to start off with the blank chart here on the E-mini S&P futures first and see what we can take away by just looking at some positioning and candle structure. So what do we have here? Sellers did really try to bring the market down below last week's low. Unable to. We can see by the nice wick here that buyers came in, was not able to. The sellers were not able to find acceptance down at these lower prices, and we pushed back up higher. Of course, we had a huge move in the markets from Jackson Hole, with Powell suggesting that interest rates, we might have a cut coming up, and it will be actually very interesting if they do go ahead and do that without the labor market really supporting that idea as far as I'm concerned. But if they do cut rates, I would actually be looking for a bit of a downturn in the market, counterintuitively. But interestingly enough, you can see really where the low was. We had this basically sideways balance created after a large impulse move, kind of created a bull flag here, which did break out but ended up failing for 2 inside weeks. But you can see here the low from last week pretty much retested the balance range highs that we had created on that bull flag. So you can see that right there, and that's right around what's the high here if we want to actually get exact about it. The high from the 14th is 63.57, so we can say 63.57, 63.60, big number there that we will be watching. But as long as we hold over this area, really nothing to be concerned about for me. We would just, as long as we hold over this level, everything is just bullish consolidation. We will watch out for any changes in market structure, but bullish consolidation will be, of course, watching again for a potential shift in character, but also potentially a distribution move could take place as well. But it's neither here nor there. We will know, though, if these highs from the 14th do start to find acceptance, well, then we can start talking about another scenario and potentially some more downside coming in. But until that happens, really all for naught. And, can the weekly sustain a lower high? Excuse me, a lower high being put in here? Well, of course it can, right? And the real big level that we need to be paying attention to, or that I'm going to be watching from that structural sense, was right this balance range area high here. So as long as the markets really hold here, even if we got that pullback into this area here, I'm not really too scared about anything for the markets. And coming back, and if we do break, and of course, this is the next big area, right around 61.70 down to about 61.20 is the zone I will be watching. You can take a look at that high. If you really want the low there, take a look at the high from the week of, June 16th. That would really be the breaking point. Exact number there. The high is 61.09. Okay, so that's what I will be watching as the last line of defense before the weekly could indicate another shift, a bigger shift in character and the delivery of price. That being said, for now, 63.70, 63, what's the low here? 63.60 is what I will also be watching. If in fact we can get below that 63.60, 59 area, well then I would think that we would retest the bottom of this balance range here, the lows, and we could put a little line out here, right? I would think we will come down and retest the weekly lows of the start of the month, August 4th, and the week of July 28th, and the 14th, and the lows in that area 62.41. So I'll be watching that as well. So I'll just mark off these levels so you guys can actually see them a bit clearer. And I'll put that here. And right there. So these are the key levels that I will be watching here on the weekly chart. And as far as, like I said, as long as we stay above 63.60 on the weekly, really nothing to be concerned about. We will just be somewhat consolidating sideways for the next potential higher high to be put in. I mean, right here we did make a new all-time high at 65.08, but until we make a new higher high, it's just sideways for now. So we will see what happens with that. And let's take a look and jump over into the daily chart now and see what we can take away from that perspective. So let's start to break that down and come in here. Now, one thing I do want to mention, and when we'll really see that difference, but I want you guys to remember the size of this candle here for Jackson Hole. We had a huge move, right? Let's just go from the lows. About 100, we'll just call it 130 points, 128 points there. Move on the Friday session, up higher, breaking this little downtrend. Very nice. And just look at the size of that candle. That will be interesting to watch when we come into looking at the NASDAQ. As far as this daily view is concerned, what I will really be watching, as long as price stays over 64.30, okay, 64.30 highs from the 8th and from the 11th, and it can come down the highs from the 20th. It's a little bit above that level, but I don't use just basic support and resistance, more of a supply and demand zone type of trader. So give or take everything here by a few points on the ES and a little bit larger on the NQ. With that said, as long as we stay over 60 from the daily perspective, as long as we stay over 64.30, still have to consider this bullish consolidation for that potential chance to go ahead and break up and make a new higher high, new all-time highs up and over 65.09, 65.10, might as well just call it the whole number there for the next move up higher. But I will say, if we I'll start to change my tone under 64.30, under 64.25. Okay, then we can start talking about potentially coming down. We do have some lows from the 8th of August and the 12th here. So we could make a little pit stop at 60 in the 63.80, 63.85 area. That is certainly possible, maybe a little bit lower. We do have a couple of tops here, equal highs just below 63.80. But all things being equal, without the pit stops, I think that if we start finding that acceptance, especially under 64.25, then it would be very likely that we would come back down, especially under 6,400, come back down and retest the prior lows from the 21st, the 20th, and even that Friday session. There's a lot of thin structure created on this big move, so watch out there. I'm actually going to just put a little zone there, right. And this area here, we already kind of was looking this on the weekly chart just earlier. This is where I was saying the 63.30s, 63.60s. If we start to break under this zone here, well, that's when things can get a little bit more interesting for the bears, and we can look for further downside. But until that happens, yeah, sure, this is a decent move. What is this? 64.30. I mean, let's just do it. It's about 60. I thought it was 65. Where's my math? 60. I was a little off. 62 points. So that's definitely tradable. With NVIDIA, as I mentioned before, of course, it's going to affect the tech sector a little bit more, but it's still heavy weighted in the S&P as well. So we could still just see, again, choppy price action Monday and Tuesday with the stronger two-way tape ahead of the big earnings announcement. Okay, let's move along. And before we actually get into the day trading levels, I'm going to go back to the blank chart, and I just want to pull up, and when I was talking about that thin structure, I just want to pull up that chart so you guys can visually see what I mean. Just need to find the right format, and it's 11. Okay, here we go. All right, so here we're looking at the 30-minute chart here on, as well as a volume profile, and you can really see here the lack of participation and volume on that huge move created on Friday from a Jackson Hole. And this to me says that if we do actually start finding these cells, and I could say that what is this, 64.70, under 64.70 really opens us up into this volume void here. Would not surprise me to retrace potentially 50% of this impulse candle. I wouldn't be shocked to see that. If we do start to really see some sells, it would be pretty easy to chew through this. And let's just take a quick look of what 50% would potentially be. Take us right around 64.50, so about 30 points or so potentiality, and maybe even down here. Volume point of control up towards the highs. And this is value area low, which is at 64.42, and just a little bit lower than that 64.50 area of that 50% retracement from the high and low of the 10 o'clock candle. So I will be watching that very closely. The move looks a lot more impressive on the 30-minute chart than it does on the weekly, but I think that's kind of funny. But either way, just a huge gap here to potentially have some playtime, and so we will definitely be watching that very closely. And no, I don't have one in front of me. And I think it's actually interesting. One other thing I want to point out here, where we bounced on the 4 hour, and I was saying this a bunch in chat. Pull up the daily chart. Right, look what happened on the 4 hour, where we came into the 200 SMA. Tried to sweep it a couple times, unable to though, basically making a double bottom here, equal lows, very close to the lows over here from earlier 2 weeks ago it looks like. But 200 SMA right on the 4 hour, came right in, couldn't break, and then kaboom. So beautiful spot, catching any longs down in this area. And that's why, of course, I always say those higher time frames are very interesting. You can catch certain things that other people that are stuck on the 1 minute chart will not see. And this sets you up for those and bigger, much nicer opportunities, for a couple of days, swing trade or something like that. Now, of course, it looks beautiful now in hindsight because we did not know what Powell was going to say. But either way, even if that wasn't happening, I would have still been interested in this trade for a swing, just coming into that 200, which, as we all know, is a very powerful moving average. All right, let's get into some day trading levels here on ES for us and keep moving along. Okay, let's get into a 15-minute chart. All right. All right, now this will be our most granular view so far. Sitting right here on the 15-minute chart just above the 9-period EMA. We did cool off a bit on our Momo. Oh, and that was another thing that I did want to mention really quick. We can stay on this chart, but I am watching on the weekly, again, getting very, very overbought. So that is interesting, and we'll have to see where we will be at the end of the month on this reading as well. But right now, where are we getting our readings on our overbought Shark Momo? Let's see. Just curious. And without a doubt, oversold. These things can stay oversold for a while, but eventually, when they do turn, you get a nice move, especially on the weekly. Where our readings up here, positive 12.28. So getting pretty high. We've seen higher before, and we've seen it sustain up in the 12s, 13s for a while. So it's hard to time that, but certainly worth noting. Okay, let's get back into the day trading levels very quickly here. All right, so all things being equal, right, unless we get under 64.70, 64.73, all's for naught. Everything's good and good for the bulls. But with that being said, I think we can test the lower part of this range that we're in. If, in fact, we do start to break below 64.80, then I would see what happens. We probably would have a date. And really, we should say 64.79, breaking the 20 there. But I think under 63.83 starts to open up the door for the potentiality of the downside, testing that 20. Underneath that, certainly 64.70s could be back in play, retesting these 12.30 and 3.30 lows from the Friday session. So you have either we hang out up above right here, and then we go ahead and retest Friday's highs once again and see if we can get up and over, or we start to hang out underneath and then we fail, come back in. Do we triple bottom here and find a reaction? I don't know, but it certainly is a spot to potentially try for a long trade. It's not out of the question for that actually to be supported once again. Under that 64.73 though, watch out, kind of some more of that downside. It's 64.67, and under that 64.60, and here's our 50% retracement. 64, I have 48 here, but as we mentioned before, it's basically 64.50 is that 50% retracement. So let's see what happens. All the thin structure, there's definitely that potentiality, and you can even see it on the volume profile here as well, where it's just a void of activity, and that'll be interesting. So there's a little bit more to talk about for the downside because we are up in the new all-time highs area. So for the downside, again, if we make a new lower low here, certainly breaking under that 64.70 is changing the structure. Maybe we get a little bounce. There we go. Maybe we get a little bit of a bounce there if we come down, retests, and then we go ahead and make that lower low down. So what's it gonna be? We've got our two choices right there. Right. Okay, let's get into the NASDAQ 100 and see what we can take away from the tech sector. And remember, I mentioned on the daily chart that I wanted you to remember what that daily candle looked like. Well, let's get into the weekly. Well, let's get into our blank chart first for the NQ. Let's go back to our other style here. Get onto the weekly. Okay. All right. Okay, so what am I watching here? Now we have the same thing. Let's just talk about that weekly higher low being put in. Same thing as ES, right? The highs from this area. You can see the zone, I think, pretty clearly, at least from my perspective. But, right, throw it in right here. So even if we came down into the 22,200s, even just below, I mean, and we could even say 2200, as long as that holds, really, it is no big deal. And that is, what, over 1,000 points lower from where we are. It just would be a weekly, yeah, it's over, it's 1,600 points. So give or take that, it's just a weekly higher low. And that could really give traders a better trade location to come back up, of course, to retest the highs once again, and then to see whether or not we break over and then go ahead and make a new higher high on the weekly chart. So that is certainly a good spot to consider, and a trade that I would consider taking myself. Okay, let's also just go in here and see where we would need to hold, right, for the bulls on the NQ from the weekly point of view. Well, and actually, let's put this here. This is definitely looking a little interesting with last week's candle. This will probably be a little bit better illustrated on the daily chart. Let's pull up the weekly chart that we have been working with. Okay. Yeah, from the weekly view, I mean, as long as we hold the lows from the first week of August, the 4th, the week of the 4th, the beginning of August, 23,000, as long as we hold 23,000 and ultimately 22,780, 785, really there's no issue there, right? As long as we hold these lows, no issue. But if we do break, then we can start talking about retesting that zone that I was mentioning earlier for the weekly higher low to be put in, as we just kind of went over. Now, we would have to definitely pay attention if we did come down and break this, right? If we saw price come in here, we did find a bid, we would have to now, of course, take this area as into flipping into supply. So that could happen, and we might have some issues at that spot. So we have to, of course, keep both sides open. So we could see that reject, and we could even potentially get stuck in this range like that. If that happens and we are stuck, I'm going to probably consider this. some bearish consolidation taking place on the weekly, and really be a little bit more open-minded to the 22,100 breaking, bringing us down on the weekly probably to 22,550 is what I will be watching for. So we will see. That's neither here nor there because we are still within this range, and technically we'll see what happens if Nvidia is going to be the monster that drives us to really sweep and make that new higher high instead of this marginal higher high that we had made in the week of the 11th. All right, let's get into the daily chart because I do want to see what our equilibrium is on this zone. Okay, and here is what I was mentioning, and of course, it was a big move in the NQ as well. I mean, that goes without saying. But just look at this candle. You can see, and I actually posted this to my Twitter, there is a big divergence in the QQE, the RSP, and the S&P 500. Tech is lagging, and that is definitely something that I am paying attention to right now, and potentially we could take a quick look at the divergence in QQE, how the tech sector on the weighted index made a new higher high, where the equal weighted with the QQE did not in fact make a higher high. So that is interesting. RSP and SPX, or the S&P 500, SPY, ES, whatever, did make that higher high, but the tech sector did not. So that is definitely something I am paying attention to. Okay, so here for the daily chart though, what am I watching? Well, the bulls need to hold the highs from the 20th. Okay, so that's what I'm going to give them. And actually, 58%. Yeah, it's just not as cut and dry on the NAS here, but I'm going to say as long as we can hold over 23,500, 23,525. Okay, potential bullish consolidation sideways like this. Still going to need to get over, right, the lows of this balance range. Right here we had this double bottom, impulse candle breaking the structure, giving us a change in our price delivery. So the bulls still, or the sellers still have a potentiality of causing some trouble here. If we do consolidate sideways, maybe create a bull flag, maybe we build up that power to break up and over, but that is yet to be seen. We could potentially make that push, and I'd be even interested to see if we push over and then do a look above and fail and come back under, or if we just go for the straight rejection and we come up and then are unable to push up, and maybe a sign of a failure there from the bulls. The look above and fail, I think, would generate enough liquidity where it'd be a little bit more confident in to say then we could break this 23,500, and if that does happen, watch out. Probably another 100 points down lower, 23,400, definitely a possibility, maybe a little bit higher. Look at the highs from the 21st, which is coming up into 23,370, so about 50 points there. 23,370, 23,330 is a potentiality, but you can see we've had a lot of reactions kind of in that general area right here, a bunch here, and right. So that is something I will watch to see. And like I said, if we do the look above and fail, I will be a little bit more optimistic, or I don't know if that's the right word, confident in saying that we have got the liquidity from the sellers there. So what if we come up, come back down, right, and come back down into this area. Right, from there, it's anybody's guess if the bulls come in once again, potential, right? But even if that happens, no big deal, right? Because here's still that area down at the 23,100s, right down in this area where we can potentially just be putting in, on the weekly at least, the higher low overall, and we come down and this is where we get that big springboard, as we were talking about on the weekly chart earlier. So that's what I'm looking at on the daily chart. All right, let's get some more granular and break it down into some day trading levels for the nasty Nas here, and see again. Be careful with the chop. Be careful with the 50% retracement. Got a lot of things to pay attention to this week. All right, so there we go. Okay. Now, I need NQ up and back over. What is this? 20. Well, we could say 23,600, 23,585. Okay, let me see some hourly 30-minute acceptance closes over this area. Then we've got the potential to come back, retest Fridays, equal highs. Okay, so back up into the 23, 625, 630. Definitely a potentiality there. You know what? I want to mark up a little zone here. Boom. Zoom in. There we go. All right, so we could, like I said, over 23,585. Let's see some candle closes. Then we can start talking about attacking these upper ranges here. But honestly, I mean, if we come back into this zone, potential area where I might be interested in a short trade. I actually got a short trade on Friday up in this area and rode it. I didn't actually get all the way down. I think I got about here, but it was a real fun trade. Definitely a tricky trade, but it can be another area where we can see some potential sellers. Again, you can see these wicks here where we just could not really accept and make a higher high. Right here, is our lower high, at least on the 15-minute, being put in, right? Higher high here. Then we've got our lower high here. So we'll see. Could this also be the third lower high, and we just end up, doing something like this? Oh wait, doing something like this. This will be interesting if this wrong tool there. Sorry. If we start to round off like this, start seeing price like that, I'll be looking to attack the lows once again, either on Monday or Tuesday. We can attack these lows. Possible long area, 23, 530s. Watch out for any manipulation here down to the 525s. But that also is an interesting spot for potential longs. If we do break, though, then I'll be looking for really the lows from 1245 back down to 23,500. So if we start finding acceptance in this area here, hanging out, I'll be looking for a downside, looking for the chart to come down again and retest Friday lows. If that is broken, my next area will be some sell side down here, only 10 points underneath 23,500. What could actually end up happening? We might hit this, but what I wonder, people all end up longing here in the 23,500s. They get stopped out. We sweep, come back down, generate the liquidity down in the 490s, and then recapture that 500 up for a long. That also could be something that happens as well. So I'll be watching for that. Right, I'll just put this out here. Right, what would that look like? Right, we come down, sweep, come back up, higher high, retrace back in, and then you take the long after the higher high and come back up into the, what is that, about 35 points or so into the 20s, into the 30s. And probably reject there, very possibility, and then maybe we break up and over. And then we come back down and up into the 23.550s by 45. So that is another possibility as well. But certainly a range here to play with, and can have some good opportunities in both directions. So got a little bit of a bull plan there and a bear plan to see what happens. And you know what? Since we looked up, since we looked up the 50% retracement on the SPOOs, let's do it for the NAS. Yoink. 50% retracement, 23,430. Boom. All right, so just have that in the back of your mind too if you want to. Okay. That is everything I needed to go over for in Q. Let's start to take a look at some of our other data points that I like to look at. All right, let's just look at the sectors. Okay, Friday, everything was green. Look at Volt. Up and over, almost off the charts. Holy moly. ADD up at 2,000. I mean, that's not really sustainable. We're above the bands here. Seeing the ADD up here, this ain't gonna last in my opinion. The ADD being up here is like a VIX at 70. It's just not gonna, it's just very unlikely. Watch to see what happens if we fall below 1,500 on that. Probably start to see more downside. It really would not surprise me in the least. As a matter of fact, I'm going to take a little screenshot here of this. But obviously super strong. Okay, what's going on here? Rate, yield curve still coming up higher. No cracks in the labor market, so doesn't really mean anything quite yet. One-day VIX couldn't sustain over 15. Back down in the comfort zone here in this range. So nothing from the one-day VIX. Let's just take a look at the put-call ratio and the regular VIX. Put-call ratio, oh, it's starting to get a little bit interesting here, but nothing really on the big bounds that was giving me any clear counter-trend trade. So nothing for the put-call ratio. And it looks like a lot of people just really came back down to the balance zone there. All right, just when the market was getting a little bit more fun to trade with VIX up in 17s, now look what we have to deal with. 14s, once again, get ready. It's going to get harder and harder with the VIX down like this to get those nice trades. So it will be more 30-point, 40-point trades, and those 100-point, 75-pointers going to be a little bit harder to come by. Keep that in mind. Love to see VIX back over 15 at least, but really over 15.75. We can start talking about higher VIX once again. Staying below 15, and I mean, well, we're not that far away from 15, but really the 15.75. As long as we stay underneath, well, then all things being equal, probably head back down into 13s again. And that's just a boring market to trade. But that's neither here nor there. We got to deal with a different environment, whatever we're presented with, right? Let's look at how many stocks are trading over the 50-period moving average. Came right into, and this was a big beginning of the month, came right into that 50% marker, which we kind of use as our barometer there, and coming back up towards the 75%. Let's see what happens when we get a little bit higher. If we get a little bit higher here in this area, up by 75%, I start to get a little bit more potential of a counter trend move in the market, but we're not there yet. The 200 is screaming and soaring up above the 50%, doing well. And new highs versus new lows. Let's look at this, another breadth indication. All right, held the zero line, again, our barometer for new highs versus new lows. Nothing to really be concerned about there. So internals there looking nice. Let's look at the junk bonds in isolation. All right. Just ripped up higher. Let's extend this. Okay, so junk bonds higher, risk on. Oh, look at this retest on SPY, this old trend line I've got. Beautiful. Right off of it. Okay, so no areas of concern for the junk bonds. Let's look at TLT and let's look at the 7-year. Ooh, about to get real close to this big area, right around the 120, 119 zone. So that's going to be interesting here for our bonds. And but let's look at the longer end here, the 30-year. It's stuck. So this is interesting. Seems like the shorter end of the curve is a little bit more, oh, I did I duplicate this? Is a little bit more spicy. And turn this into a little range for us. There we go. So let's see, breakout possibly here. Need the TLT over 87, and we can start talking about that 88.40 again, which we've talked about a bunch and has been an issue for the TLT a few times. Up and over that 88.40, 45. Okay, then we can start talking about 89 once again. You know what? This should probably be a little bit higher. There we go. Yeah, 89.15, we'll call it. All right. Credit spreads and bond ratios. Credit spreads, well, we've been watching this. Still under the 50-period moving average. Risk on. Heading down. Risk on here as well. No issues there as far as that's concerned. Bond ratios. This is the one that's getting a little bit interesting. The short end versus the long end. Getting over the 50-period moving average. That is interesting. So maybe one little small bearish data point here, but nothing too crazy. And corporate grade bonds are just ripping up after breaking out of this downtrend. Let's see if there are any divergences in the transports and the Dow. I mean, yes. Transports are nowhere near the all-time highs. The Dow is, so that is a little bit interesting, but it's certainly not looking weak. Still holding the 200-period moving average on the daily. Nothing really to be too concerned about, but there is a divergence there, but nothing that's really, yes, we're not at the all-time highs, but this isn't weak. This doesn't look, we're not below the 200 or anything like that on the daily. If we were, then, okay, we could start talking about a little bit of a stronger signal for a potential divergence, but even though we are not at all-time highs, which they should be technically, this doesn't look overly bearish to me, but slight bearish divergence there, I'd have to say, but very, very minimal. Looks like the dollar probably fell off a cliff, yeah. Okay, this is from Powell saying we might raise rates. Tried to find that acceptance over this key area, over the 80, 98, right? Couldn't hold, held there for a little bit, and then kerplunk. As long as we stay under 97, 98, I mean, there's nothing for the dollar. Okay, if that's the case, just throw out since we bounced there. So we'll see. We might just get trapped here. But as long as it stays under 98, we'll just call that bearish consolidation and look for it lower in the dollar. TNX, looking at the yields, well, really meaningless, not over 43, not over 43.65. We had a shift in character here, so as long as we hang out under the 43.64, probably hit the lows from the start of the month, August 6th, back down to a 4.2 reading, under that 42. Okay, and maybe we can see a bit more downside and the bonds really start to pick up, but really nothing too going on here, but nothing too really to be concerned about. Put call ratio. Oh no, we already went over the put call ratio. Let's look at the VIX futures really quickly. What did the skew do? Anything? Nope. Okay. Inverted ZT heading a little bit lower makes sense with the potential with the rates cut. Pricing it in a little bit. What is the VIX futures? I believe they are still in contango. Yep. Okay, bullish above the zero line here. Bullish contango, and the volatility of the volatility just when it was getting fun and interesting. They had to ruin the party. We're back below 103, 105. As long as we stay under that, really nothing to be concerned about on the volatility front. So that's pretty much everything I wanted to go over for this week's video. Again, thank you so much for joining me. Really appreciate it. If you want to support me or the channel at all, links are in the description. Remember what we say at the end of every video: a prepared trader is a profitable trader. So pat yourself on the back for preparing with me this for the upcoming week. Really appreciate it. Again, don't forget to subscribe if you haven't. Thumbs up on the video. Do you think we do get a retracement in the market this week, or does NVIDIA come and save the day? Oh, looks like futures just opened here, and the NASDAQ up about 25 points. The ES is basically flat, up about 5 points, and I don't really expect much in this Sunday trading, but markets have just now opened, so we'll see what we get. Okay, plan your trade your plans. Let's have a great week. Wishing everybody a fantastic trading week, and again, thank you so much for joining me. Really appreciate it, and thank yourself. Good job on preparing. That's what it is all about. All right, I will see you guys out there in chat, on the internet, in the markets. I hope everybody has a beautiful rest of your Sunday. Take care. Signing out. Or off, I should say. Take care.